Minister, there was only one set of guidelines. They've never changed. I hope you accept that. There was clarification provided during different periods. And can you maybe explain to me this? Because, yes, you're right. I did write to the Central Bank on the 11th of June. I pointed out in my letter how come Belgium and Spain were able to waive interest rates for consumers in those jurisdictions, working by the same EBA guidelines. I knew the answer, but I wanted it in writing so I could show yourselves and others that this didn't need to happen. How did I know the answer? Because I had engaged with the Central Bank before that. We've had conversations in relation to this issue with the Governor of the Central Bank, and we have looked at what happens in other jurisdictions. We've also looked at the EB guidelines in relation to the 2nd of April, which you read out selections in relation to that, and also in relation to guidance that was provided at the end of March in relation to this issue by the European Securities and Markets Authority, which clarified on the 25th of March that it was not necessary for interest to accrue. Now, you know, because your colleagues in Spain and in Belgium do not require interest to be charged, particularly in Belgium for low-interest loans. Can I ask you what's your view that the CEO of KBC sat at that meeting with yourself and the Taoiseach, while the CEOs of the main pillar banks here said interest must be charged as required by the regulator, the approach which was required to prevent a loan from being considered as going into default felt the right one. Another comment from AIB was that the risk was clear that if interest was not charged, there would be a default and there would be a credit rating on the customer. Now, the CEO of KBC, who sat at that meeting, their bank operates in Belgium, and for low-interest customers, for people with low incomes, they do not charge interest. That bank does not charge interest in Belgium during the payment breaks, under the exact same guidance, the European Banking Authority guidelines, which were issued on the 2nd of April, and also the clarification that was issued on the 25th of March by the Securities Agency. So how can you justify that? And more importantly, given the fact that Permanent TSB makes it very clear, a state-owned bank, that if you take a 6-month break on a €250,000 mortgage without an extension of the term, the bank will charge you an additional €6,300. How is Minister for Finance and the person who holds the majority of shareholding in that bank on behalf of the Irish people, how do you tolerate that?
Minister.
It was my job as this issue was developing to work with the banks to ensure that provisions were put in place to allow payment breaks be given to mortgage to loan holders at a time they would need them the most. Deputy Doherty, when we were facing into this period, we were facing a public health crisis, we were facing an economic emergency. And due to the work that I did, the Department of Finance did, and indeed work that the Central Bank of Ireland and banks did, we did put in place a recognition of the huge challenges that people were facing and put in place payment breaks to reflect that. When we're debating these payment breaks, let's also take account that 160,000 of them have now been made available to those who needed them and those who deserved them. Let's recognise that there are 70,000 payment breaks now in place for mortgage note holders who need and deserve support. That is in place, Deputy Doherty. And you've quoted what's happened in Belgium, but you haven't said that what also happens in Belgium is that people with savings of more than €25,000 are excluded from the provisions that are made available in Belgium. You haven't touched on the fact that in Germany, for example, the length of the payment break is 3 months at the moment. So there are differences between what is happening in Ireland and what is happening in other parts of Europe. But when we look at what's happening in other parts of Europe, let's look, for example, at Belgium, that many mortgage holders are excluded from being able to access these breaks. Let's have a look at what's happening in Spain, where there's very strict criteria in place, understandable from their point of view, only limiting breaks to a certain group of people on the basis of their income. What we've done here in Ireland is we've made mortgage breaks broadly available to those who need them the most. And in relation to the issue that you've made and you're questioning me on regarding the role of the regulator at the time, the way this was interpreted by the central banks, I was also engaging at European level, saying that we must do all we can to minimise the risk of a further non-performing loan difficulty later on in the year, where again we face into those who are not able to pay their mortgages through no fault of their own, facing the kind of difficulties of our recent past. So, Deputy, when you're quoting from other countries, you might also compare to how the system that we have in place is also different in terms of the breadth.